Welcome to AM Best Audio.
U.S. annuity sales in this year's first quarter remained above the $100 billion mark for the 10th consecutive quarter, underscoring sustained demand for guaranteed income and principal protection amid ongoing market volatility and economic uncertainty, according to LIMRA's latest research. While overall sales edged slightly lower year over year, growth in registered index-linked annuities and income annuities highlight shifting investor preferences toward protected growth and retirement income solutions. I'm Lori Chortis for AM Best Audio, and joining us now to discuss that and other trends in the U.S. annuity market is Keith Golembiewski, Assistant Vice President and Director of Annuity Research at LIMRA. Keith, welcome. So great to speak with you again. Thank you so much for joining us.
Of course, Lori. It's always fun to talk about the annuity industry. A lot of great things happening.
Absolutely. Well, Keith, just speaking about that exciting industry, can you tell us about some of the factors that are driving annuity sales to remain consistently above the $100 billion threshold, despite ongoing market volatility and economic headwinds?
Yeah, that's a great question, Lori. So based on our research, the first quarter came in a little over 107 billion in annuity sales in the U.S. So very strong. That continues that trend, right? As you mentioned, 10 straight quarters of over 100 billion in sales. There are a number of tailwinds that I think are really driving this sales activity. The first one is really around the continued strong equity market. We've seen positive returns from 2023, 24, and 2025. S&P, I believe, was over 20% in two of those years and roughly 16 to 17% in 2025. In 2026, we've had some ups and downs, but overall, we've seen significant, strong performance continue. In May, really last month, the S&P 500 gained about 5.3% to close out that month. That came right after of over 10% return in April. So I believe right now the year-to-date return for the S&P is about 10.7%. So that really continued growth is really resonating with the number of the annuity products that are being offered today. In addition, interest rates continue to be strong. The 3-year Treasury rate at the beginning of 2026 came in at 3.55%. That actually grew to 3.81% at the end of the first quarter. And if we look at where we are today, at the end of May, 3-year Treasury was over 4%. So even as the Fed lowered rates a few times last year, Treasuries continue to increase. And that, of course, is resonating with a number of the factors for annuity products. In addition, exchange activity has been very strong, and that's not a negative thing, right? It's really allowing clients, with the help of financial professionals, to take advantage of strong current rates, of new guaranteed living benefits, and then, of course, improved product designs and a lot of the new product launches that we've seen in 2026. So exchange activity has helped and continue to support annuity sales for the industry. And then if I take a step back, when I think more holistically for this industry, and really over my almost 30-year career in financial services, the level of partnership and collaboration is really monumental, right? And I haven't seen this in the past between annuity carriers, distributors, financial professionals and advisors and agents, even reinsurers, and now technology firms. And really, this partnership and collaboration is not only sustaining kind of the sales activity, but it's really positioning this industry for growth over time, right, and for the future. And then finally, right, I mentioned technology and technology firms. Technology is really improving the experience to purchase annuities, and it's providing a better experience for the financial professional, for the wholesalers, for the carriers, and of course for the consumer and client. So now with the expectations for more speed, for better capabilities, for that perfect experience that many individuals get if they go shopping and do other things outside of annuities, that's so high. And now I think the annuity industry is really making inroads here.
Keith, how is consumer demand shifting among registered index linked annuities, fixed index annuities, and traditional variable annuities? And what's driving those allocation changes?
Yeah, I think it's probably to start with registered products. So that would be the registered index linked annuities or RILAs, and then the traditional VAs. Clients do take on risk, right? They do take on the risk of potentially losing some of their assets. However, with a lot of these product designs, they are really extremely attractive to clients that are looking for protected growth. They want guaranteed income. And now that if they want flexibility, there's a lot of flexibility in the various product designs. And of course, as I mentioned earlier, when you have strong equity performance, clearly registered products, clearly products that provide upside based on the performance of the equity market or the performance of various indices, they clearly resonate in kind of the environment that we are living today. So I think the equity market making these products very attractive. We are seeing a lot of living benefits. So when I say living benefits, also known sometimes as GLBs, so these are the guaranteed living benefits. Usually these provide guaranteed lifetime income. So that is definitely resonating. We're seeing a lot more of these features on the RILA products. They've always been a core component of the fixed index annuities that are being offered. And now we're seeing a resurgence in some of these features on the traditional variable annuities as well. So for traditional variable annuities, many clients that are looking at these type of products, right? They as part of their financial planning, they're looking for upside, right? And they want to have full exposure to those underlying investments. And now with some of these living benefits, they do have the protection as well. So across all three of those product lines, I think it's that balance of upside, protection, and now starting to think about guaranteed income. And I think that is such a huge topic when we think about where we are from a standpoint across the U.S.
Well, digging a bit deeper, if we may, into RILAs or registered index linked annuities, sales in those annuities jumped 21% year over year to $21.2 billion, marking the second highest quarterly total on record. Keith, how does this performance compare to what LIMRA was seeing at this time last year, and what's fueling this continued momentum?
Yeah, as you mentioned, when we think about that year over year growth or change, RILA sales did jump over, sales jumped over 20% year over year, right? We've seen this consistent sales growth over the last decade, right? Continues to grow, right? As this type of product really resonates with distributors, financial professionals. There's more awareness of what the RILA products can offer. So I think just a lot of those dynamics of the availability, access, the product features, and now just awareness of how these products work. When we look at the LIMRA sales projections, we are projecting that RILA sales will reach about 85 billion for the full year of 2026. So the first quarter sales numbers of 21.2 billion really perfectly aligned to what we projected in the fall of last year of what we would see for 2026. I think right now we've seen a lot of new product launches across the annuity carriers. We're seeing a lot of new indices, and I think some of those are definitely going to resonate. Whether it's providing access to different regions in global access to various investments. So you're seeing a lot of new indices, more on that global standpoint. You're seeing indices really provide features more around, how do you navigate some of the market volatility and being able to have some of that upside, even with trying to manage the volatility that we see in this current environment. We're also seeing features that can potentially provide returns or upside, even if the market or index goes down. So you're seeing some of those features that are really popular within this space. So I think to reiterate, we're seeing a lot of product innovation. We're seeing new distributors really offer RILA on their annuity platforms. You're seeing financial professionals really starting to sell them and understand these products and more focus and awareness from them. So all of that, I think, is helping really continue this momentum for that product.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
Keith, what role is market volatility playing in shaping product selection and allocation decisions across the annuity market today?
Yeah, there's been a lot of market volatility, right? I think we've really seen that. And it's not even just the last 5 months or the first 5 months of 2026. A lot of volatility in 2025. So that is almost becoming the norm. And I think that's, annuities can really resonate when you are trying to manage the volatility. So whether it's some of the features, as I've talked about already, the living benefit features, the death benefits, right? If you're looking to provide some type of legacy for your beneficiaries, having different death benefits, even depending on what the market does in the volatility, you still have that peace of mind and that protection. And then recently, as I just mentioned, for the RILA products, a lot of those control volatility indices that we're seeing annuity carriers offer, that's helping, those innovations are really aligning to the market volatility environment that we've been living in. So I think volatility has definitely shaped product design. I think it's also, it is definitely shaping the products that consumers decide to select or pick. And of course, when you think about the need for financial advice, the role that financial professionals and advisors and agents can play, annuities can align to most of the needs of consumers. So I think it depends on where they are in their life, what type of goals they have, the needs that they might have in retirement. I think most of the products that are currently being offered can align to that. But market volatility is definitely shaping kind of the picks of what consumers are selecting. And that's where I think you have seen RILAs really resonate. You've seen the FIA, fixed index annuities, resonate. And then you're seeing, of course, that election of GLBs helping control some of that volatility.
Well, speaking of consumer demand, how are carriers and distributors evolving their product offerings and strategies to meet growing demand for protected growth and retirement income solutions?
Yeah, the first thing I would say is really building out that diversified product portfolio. So that is what we've seen from the annuity carrier perspective. Um, we've used the term building out kind of the all-weather portfolio, and that's really having products that can resonate in different market environments, whether it is that market volatility period that we've been living in, or whether it's bear, bull, various environments. So that's what we've seen a lot of the carriers focusing on right now, not making sure that they're not just focusing on one product line, but having a diverse product portfolio that can resonate in different market environments. The other thing really is trying to balance, right, the right product designs, of making sure that they have some uniqueness, that they're balancing risk. They are balancing that simplicity versus complexity of product designs. And of course, they want to balance and meet the needs of the customers. So you're seeing a lot of that, those dynamics in play as they come out with new product features and designs. Carriers and distributors, right, are also looking at different ways to expand what we would call the annuity pie. There are trillions of dollars in assets in IRAs, in 401ks. So how do you build products like the CDAs, or contingent deferred annuities, also known as insurance overlays? So clients don't have to move their money out of their current investments into an annuity, right? They can still leverage those guaranteed income features, but now more in a unique insurance overlay design. Also, in-plan annuities, where really participants and consumers are investing money, right, in their 401k. That's part of their, the daily life of working in the U.S. They're actually now, how do you build in and how do you provide annuity solutions, really where they are investing probably the majority of their money, and aligning annuity solutions there. So I think that's really where, right, we've seen the carriers, distributors evolving their designs. I would also say, right, technology, the ability to customize, the ability to personalize. I know there are some legal and regulatory constraints for financial products. However, the ability to integrate technology, the experience, you still can provide solutions that have that personalized and customized touch. So I think that's where you are seeing carriers, distributors really partner and develop solutions to meet those client needs.
Keith, looking ahead, how are interest rate trends and evolving retirement income needs expected to influence product innovation and demand in the annuity market through 2026 and beyond?
That's a tough question, Lori, but I'm glad we're at least touching on it. I think many of us really are waiting to see what the new Fed chair decides to do. Lots of balance, right, between different economic factors. Things are, inflation, the levels of volatility, impact on global conflicts that are happening today, what's going on with consumer spending. So there's a lot of things that the Fed chair, and the board are trying to figure out. So whether rates are going to come down, actually go up. I've seen different economists, approach this potentially differently. So we're all kind of waiting and seeing what's going to happen in the future. But however, right, when we look at the current rates today, rates are still significantly higher than historical norms. Annuity rates, we really haven't touched on those MIGA or fixed rate deferred annuities, but annuity rates are still significantly higher than what we've seen in the past. They're still significantly higher than what individuals could get through different financial instruments like bank CDs. So even if rates do come down, we are higher than historical norms. There's still value, and there's still more demand, I think, in some of those annuity products that we offer. And then from another industry perspective, I think there is still some kind of cushion, based on that where historical rates were. Even if rates come down, I do see sales will continue to be strong for the foreseeable future. And then from a consumer standpoint, we are, in my opinion, at that tipping point of so many consumers have been in that accumulation phase, whether you're talking about 401ks or just investments in IRAs, it's accumulation, and accumulation. We are now at that point, especially with peak 65, right? More than 4.1 million Americans reaching age 65 on an annual basis. We got to start really talking about decumulation. So many Americans are now heading into really that phase, right? How do they prepare for retirement? How do they live through retirement? And then how do they have the confidence to be able to actually start spending some of that money that they have been really saving, growing, and accumulating for 40, 50 plus years? Now it's time to actually start spending some of that money. And I think annuities really align well, right, with these evolving needs. And I'm sure there's other innovations, there's other things that this industry will do. I think technology is going to be such a huge component of that. But I think we are at that point where demand for annuities is only going to grow. And I think it is going to really help through this next phase for many individuals.
Keith, this has been fascinating, so insightful, and it's always a pleasure speaking with you. Thank you so much for joining us today. Greatly appreciate it.
Of course, Lori, always willing to do this. And it's a great topic, and it's so important, right? As you know, it's so important for Americans, and this topic is only going to get stronger, and I'm sure we'll have many more things to talk about in the future.
Absolutely, and I look forward to it. That was Keith Golembiewski, Assistant Vice President and Director of Annuity Research at LIMRA. And for AM Best Audio, I'm Lori Chortis.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.